Good morning and welcome to PacRobo Pulse for Wednesday, November 19th, 2025. I'm your host, Tiffany, and today's session is all about tech turbulence, labor market jitters, and a market trying to steady itself ahead of heavy economic data. Let's dive in. Wall Street finished broadly lower on Tuesday. The S&P 500 slipped 0.83%. The Dow Jones fell 1.07%, and the Nasdaq 100 dropped 1.20%. Tech was the main drag on the market. Amazon and Microsoft both pulled back after fresh downgrades, weighing heavily on the broader indexes. But markets did recover from their worst levels of the day after new labor market data pushed Treasury yields slightly lower, hinting that the Fed may lean toward more rate cuts in the months ahead. The 10-year Treasury yield eased to 4.12%, and the break-even inflation rate slipped to a 3.5-week low. Both signs the bond market is starting to price in softer economic conditions. In corporate news, Medtronic popped more than 4% after posting revenue that beat expectations. On the flip side, Home Depot slid over 6% after warning that consumers are tapping the brakes on big-ticket home improvement purchases. Over in commodities, grain markets were mixed. Soybeans slipped a few cents, corn firmed up slightly, wheat bounced around but ended mostly steady, and lean hog futures continued to weaken into the close. The dollar index nudged lower on the softer labor data, while the yen hit a 9.5-month low following dovish comments from the Bank of Japan. Meanwhile, gold and silver slid to one-week lows as traders trimmed expectations for a December rate cut. On the economic front, the NAHB housing market index unexpectedly climbed to a 7-month high, signaling a bit of resilience in the construction space. And factory orders rose 1.4%, right in line with expectations. As for the road ahead, markets are pricing a 47% chance of a quarter-point rate cut at the Fed's December meeting. With a packed economic calendar and earnings from major retailers still on deck, volatility could pick up as we move deeper into the week. That's your Wednesday download from PacRobo Pulse, a blend of tech turbulence, softer labor signals, and shifting expectations on interest rates. Stay smart, stay strategic, and I'll catch you in the next update.